Welcome back to Power Lunch. Walmart becoming the latest retailer to announce plans to replace its physical in-store price stickers with electronic shelf labels in its aisles. While the digitized shelves will allow stores to provide more details to shoppers, it also gives them the ability to change prices as often as every 10 seconds. Joining us now on set to break down this latest dynamic pricing trend is Phil Lempert, Supermarket Guru CEO, and our own Melissa Repko. Great to have both of you guys. So, Phil, how much danger is there here if shoppers aren't reassured that they're not hiking prices?
That's exactly the point. And short term, no danger. Walmart has already come out and said they're not going to do dynamic prices. They realized what happened when Wendy's talked about dynamic prices a few months ago. Up in arms. People just hate that idea. And keep in mind that what Walmart is doing is they're trying to reduce their labor costs. Labor is the #1 aspect for retailers. They've got to reduce those costs. But once they put this technology on the shelves, watch out. Now, the good news is we can get nutritional information. If, Walmart's competitor across the street goes on sale, Walmart can lower prices. But again, once that technology is in there, and that's my concern, they can raise prices. On a hot summer day, I want a lot of ice cream, I want lemonade. They're running low, they can raise the price.
Melissa, everybody loves dynamic prices when the price goes down and you get a deal. How much of this is about predictability, price stability from the consumer's point of view?
Like Phil said, Walmart told me they have no plans for dynamic pricing, but there are some high-tech features here. And the feature really is blinking lights on these labels that allow a worker to more quickly replenish that shelf when they're, putting diced tomatoes, or when they're picking an online order. It also helps them find those items more quickly. So it goes to that labor cost. Now, of course, we've seen dynamic pricing in grocery stores. People just don't think of it that way. When you see bread marked down toward the end of the day or strawberries that are toward the end of their life, you often see that sticker on the label saying, 50% off or 20% off, and people do enjoy that. The fear here, of course, is more of that surge pricing we've seen with Uber. And so it brings to mind kind of this panic about people seeing prices go up. And this is a time when people are hypersensitive about pricing. It's been a recurring issue. Everything is more expensive. It's not just in their head. And we saw this even with Chipotle, that people were filming and posting on TikTok. They were trying to get bigger portions from employees and feeling like they were getting less.
Yeah, Wells Fargo then went and did a deep dive weighing how many was 100 Chipotle.
Yes, and it's worth noting that they had a lot of variation there because there was not consistency. So it kind of speaks to this perception versus reality gap that, yes, some companies are trying to cut back. In some cases, we've seen shrinkflation. But in some cases, it's just because consumers are very sensitive.
It feels inevitable that this is where we're going, Phil, is to digital prices and things like that. So regulators will probably get involved at some level to say, put in safeguards, some kind of guardrails around the experience. But don't you think it's something we should expect to see a lot more of?
Yes, and I'm not sure that the guardrails really work. When you really look at it, and from a retailer standpoint, the average supermarket makes about 1.5% net profit a year.
Yikes.
Now, keep in mind, in the past year and a half, they've been a little price gouging, so they've made a little bit more. But the reality is it's a very low margin business. So if you can reduce your expenses, that's a good thing. The question is what happens next, and also what's the fallout? Melissa and I were talking before. Keep in mind that there are other retailers out there, Dollar General, Grocery Outlet. What they rely on are goods that are about close to expiration date that they could buy at cents on the dollar and really offer their customers,
they should
big
allow
savings.
Those prices to change day by day as that expiration date draws closer.
But they're not going to get the goods because, again, what Walmart or anybody else can do is it gets close to expiration date, they'll lower the prices.
Got it.
So that whole Dollar General channel of distribution, they're going to be at risk.
But this is about culture, isn't it, Melissa? Because with stocks, with gasoline, with airline flights, we're used to dynamic price. We just expect it. Hey, I buy a ticket today, the price might go down, the price might go up, maybe I have to check and get a refund. Is it possible that we just end up accepting a new norm? Price is moving on everything every day.
You're right. I think that this is a bit of a boogeyman that people, and it's the same way that shrinkflation has become a household term, right? People associate these prices and they have a powerful feeling about them. But if you think about what TJ Maxx does, It's dynamic pricing. They bring you last season's version of clothing for less because there's less demand. And so that's really a form of dynamic pricing, too. So I think if consumers see the upside and the downside, like Wendy's said they were misconstrued, they really just intended to lower prices to incentivize demand. So if people kind of see this play out, maybe they would become more comfortable with it over time.
But food is different. Food is primal.
Yeah.
And when you screw around with the price of eggs, look at what happened with bird flu, with the price of eggs. People are panicking. So this is very primal. So I agree with you when it comes to clothing, when it comes to hard goods, when it comes to electronics. But don't mess with my food.
Don't leave me hungry. Don't tell me my quarter pounder is an eighth pounder today for the same price. All right, Phil.